Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the 42nd COT report of 2018. And as usual, we're going to start off with the changes in commercials positions. Let's see where we had the largest change. Well, it's the RBOB Gasoline. As you can see, 29% change in commercials, 21 in large speculators, and 77 in small speculators. Pretty large changes. Amongst the largest changes in the past 52 weeks time range, if you look at the chart, of course we can consider these bullish COT change signals suggesting price of the gasoline market may increase early next week. But if we jump to the 5 years chart, don't forget that we are actually still very close to the bearish extreme levels. So in the medium to long term, at least from the COT report's perspective, there may be a further decline coming. Moving on to the Nasdaq, where we have again a 29% change in commercials positions. Very large change again after last week's change. Commercials are net long and large speculators are net long as well, so only small speculators are taking the short side of the market currently, which in itself may be considered a bullish signal. But if we open the 5 years chart, everything becomes more visible. Now, interestingly, as you can see on this 5 years perspective, traders are definitely closer to their bullish extremes. But as I said last week, it's important to emphasize that when you trade indexes, when you analyze COT report on an index, always have a look at correlating markets and COT reports as well, because of the picture may be a little bit different over there. And actually, we're just going to move on to the S&P 400, where we might just see an example for that. But before I go to the COT Extreme analysis, let's have a look at this change. 27% change in commercials positions, 24 in large speculators. Undoubtedly, these are larger than average changes, of course, pointing upwards, so bullish change signals. Jumping to the 5 years chart, you may see that we're actually more or less in between the two extremes. So here we had a very nice bullish extreme in the market back in early 2016. Then the COT report shifted to a bearish extreme, which, as you may see, did not really change the major trend. And in relative terms, well, yeah, a few weeks ago we can state that this was more of a bearish extreme than anything else, and we've just moved away from those levels. So we're, of course, I would say still closer to the bearish extreme, but definitely leaning back towards the middle over here. Moving on to large speculators COT Extreme, we've got the New Zealand Dollar on top of our list with all-time COT Extreme, not only in large speculators positions but also in commercials, as you may see on the chart over here. So this has been increasing in the past couple of weeks. Prices are still low, so of course we're not surprised to see the extreme widen, stress levels building up in the New Zealand dollar. So the picture is pretty simple, pretty obvious, I would say. If you've been analyzing reports in the past, it's an undoubtedly large extreme all over commercials, large speculators, and also small speculators at their extreme. So this suggests that we should be expecting a major change in the trend over here. We might need to wait for that to happen for another couple more weeks, but it could start, or may actually start it if we consider this week's and last week's price actions. Bit of a rise over there. Moving on to the lumber market with a 91 report extreme over there in large speculators and also in commercials. As you can see, that 91 report means that more or less almost 2 years ago we had that extreme in the market. So this is, of course, a bullish COT extreme situation that can, of course, easily increase to even greater levels, as you may see on this 5 years chart. But nevertheless, it is already considerable that can push prices upwards in the medium to long term. Moving on to our last market for this review is the euro, where we have this 82 report extreme in large speculators, 76 report extreme in commercials. But obviously, as you may see on the charts over there, there's plenty of space left for traders to move further with their positions, meaning commercials can increase their net long positions while large speculators increasing their net short positions. As you may see back over here from early 2015, there's plenty of space left for that to happen. So this trend that started off after this bearish extreme back early this year, this may actually continue. So that was all for this review. Of course, you can look at other COT charts for free on our COT charts page. A more in-depth and detailed COT analysis is available on, of course, COT analysis page, where you can look at other COT report types, other data types, and of course do your historical analysis on older reports. You can have a look at all market categories, including the market complexes that we've constructed. You can add the long-term trend indicator, volume and open interest scores, and of course the COT index as well. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.